Hey traders, welcome back to the weekly Forex Forecast. Last week we had US CPI coming out and look at the dollar. I mean, it went absolutely nowhere. Forex as an asset class last week was dead. I can't remember the last time we ever saw the Forex universe absolutely doing nothing all week. Hardly any of the upper or lower bounds were tested. And when there's no volatility, there's no opportunity. There's also no risk, but there's no opportunity. So coming into this week, we start the week off the back of those CPI prints on Thursday, coming out hotter than expected on both. However, core came out lower than it did last time, whereas headline accelerated. So a little bit of a mixed bag on the hawkish side, but not super hawkish because core, generally speaking as well, will get more weighting over the headline because, you know, core strips out the most volatile components of CPI, food and energy. So it was a mixed bag, hotter than expected, but actually, generally speaking, you know, with core coming out lower, it was kind of a non-event. And this was really reflected in not just the dollar not moving, but all of the Forex pairs last week. So coming into this week, where does this leave us? Well, it was pretty much a non-event, and we do still have the US dollar as the #1 short in the system. This has been a market been looking at shorting, and we just didn't really get the opportunity to short this at all last week because it didn't really do anything. So coming into this week, two things. We don't really have anything in the economic calendar we need to be paying attention to short term. Now CPI is out the way, we pretty much have a clear run at the markets this week. And the second thing is because of the mixed results out of CPI on Thursday, I do still go into this week with a bearish bias on the dollar, and it is still the #1 short idea in the hedge dash algorithm. So very much like last week, we will look at the pairs, of course, but with the dollar, if we can push higher into the 103.22, especially if we can test this daily low over here at the same time, this is an area that I would be looking for the dollar to pause and potentially start to reverse. And therefore, once we breach the 103.22, this is a great place to start to look for near-term shorts in the US dollar. So shorts, something like US dollar Swiss franc, but of course, with something like Euro dollar perhaps, or New Zealand dollar, obviously this would be a good place to start to look to initiate longs. So if you have a look at the markets for the coming week and we look at the rankings here in the hedge dash algorithm, you can see that there isn't a huge amount of change from last week because nothing really happened in the markets and the data that came out was not game changing. Yes, we came out hotter than expected, but, you know, headline is headline inflation for a reason. It's volatile. You can get upticks in headline inflation. The core inflation is really what is more important, and that did come out lower than last time, even though that also came out slightly more than expected. So we do still have core coming down, and as a result, I go into this week with a very similar setup to last week. I am still interested in US dollar shorts, and I'm still interested in Japanese yen shorts as well. These are two risk-off currencies. And as we get the S&P 500 likely trading into its all-time high and we start to rally higher, I do think we're probably going to see a little bit more downside in these risk-off currencies for the near term. Japanese yen longs are at the top of my list for a position trade for a bigger move at some point this year. But right now, we're still in that final kind of risk-on stage where we see stocks pushing higher. We'll probably get the dollar coming down a little bit more. Does it come down, test the lows? We'll have to see. But it does still look like we've got some risk on left in the tank. Outside of that, we can mix it up a bit because we can also look once again for Swiss franc long plays. Now, a lot of these we were looking for last week, but none of them materialized. Why? Because the markets didn't move, and especially from the upper and lower bounds. You know, these are the setups that we go through in the GMT trading room, fading those moves from the upper and lower bounds for 1 or 2 days worth of movement. And we didn't get any of that. The markets were just dead. So when we look at this coming into this week, I do like US dollar franc to the downside as my #1 Forex pair once again. There was actually a nice Euro franc opportunity from the upper bound last week. I personally missed it, but that was on the table. And also franc yen to the upside, I'm going to be looking at once again. And also CAD franc to the downside. So those are my 3 favorite setups heading into this week, followed by pound dollar to the upside, pound yen to the upside, and pound CAD to the upside. And the third currency I like to the upside is the New Zealand, but it's not super strong. You know, it is starting to move down in the overall performance scores here. So, you know, pound New Zealand, I am looking at both these to the upside, but the Swiss franc is my #1 long play. So also we'll be looking at New Zealand dollar to the upside, New Zealand yen to the upside, and New Zealand CAD to the upside. Despite the fact that we do look like we've got a little bit of near-term risk on still to go, it does look like we're coming towards the end of it. And so there is at some point going to be a reversal week. And that is something that, very often comes after a news event. So we'll play it by ear. I'll keep you updated in these weekly videos. But for now, it does look like we still have some more risk on to go. The final thing to note here is also the Japanese yen. We did get this reading last week on the 10th of January. And you can see that was this close right here, to say that this market had 70% chance of pausing or reversing over the next few days. And you can see we did rally higher. Now this has happened. If I drop down to a 4-hour chart here, this actually does set up the moves to the downside. Whereas down in this area, we were starting to see fear coming into the markets, and this usually resolves itself to the upside with a pause or reversal. This is now an opportunity to start to look. Now this is beginning to wash out of the Japanese yen. We can start to see this breaking down intra-week or even after the first couple of days into Tuesday down is the 0.6812. So keep an eye out for this. The sentiment has now washed out, and this unpins Japanese yen to the downside now in all probability. Okay, so now we've done the portfolio selection part, looking at the individual currencies, creating our watch list. Let's go through the watch list, starting first and foremost with crude oil, because this is a market that has been very choppy. I did highlight in previous videos, the 10th of December down here, this is where we got that weekly sentiment reading, 70% chance pausing or reversing, and we've kind of popped higher and we're kind of correcting. So going into this week, it's not a fantastic short, but I do still favor shorts. I'm not looking to buy this. So any continued pullback in this market above the 75.94, especially if we test this high, this is going to be the area I'll be looking for a near-term short opportunity next week in crude oil. And if we break out before that, those of you who like intra-week trading, you can look down towards the 69.23. So the first Forex pair we're going to look at is US dollar Swiss franc. This is a really good market for a couple of reasons. Obviously, the US dollar is the weakest in the hedged algorithm, and also the Swiss franc is the strongest. So this sets up US dollar franc to the downside. And I do think we could be seeing a retest of the lows, and that would signify some further downside in the US dollar. But either way, whether we come down to the lows or not, reactively, I'm looking to be a seller of this market next week. What I would like to see is any pullback into the 0.860, and these are my preferred setups, hence why we're going through these first. And if we break out before we pull back, you can look for those intra-week trades. But I do like to trade above and below the upper and lower bounds here. If we breach the 0.8607, what I would really like to see is, especially if we spiked up and we tested this low, from this kind of range and breakout, this would be a great place anywhere kind of between the 0.86 and the 0.866. This would be a great place next week to look for a near-term sell-off for 1 or 2 days in US dollar Swiss franc. This is the opportunity I'll be looking to capture next week. And if we do continue higher and we break out intra-week before we trade into the upper bound, you can, for those of you who like to trade intra-week, look for the 0.8444. Next is franc yen. Like the other markets, this really didn't go very far. We kind of corrected, pushed higher, and we pushed back to where we started the week more or less. So going into this week, because of the lack of volatility last week, I do think we're going to start to get opportunities coming back into Forex once again. What I'd like to see here is I'd really like to see this pulling back and correcting below the 167.75. And if we breach this area, I'm going to be looking for a near-term buying opportunity in this market for 1 or 2 days. And of course, again, if we break out before we test this level, you do have the option as well of intra-week trading up to the 172.10. Now remember as well, the important thing is we're looking at being reactive here. We go through our portfolio selection, we create the watch list with the directional bias for each of the assets, but then it's about being reactive, not predictive. We want to wait for the markets that set up, that give us the opportunity, and then during the week, we can step up and trade those as they materialize, as this market breaches the lower bound, for example. Next up is CAD franc. Now this is the final franc pair we're looking at in today's video, and I love this setup. I really like this setup because not only is the CAD weak, we do also have crude oil, which is bearish and weighing to the downside on the Canadian dollar, and the Swiss franc is of course the #1 long idea in the hedged algorithm and ranking system. So when you put those things combined on the portfolio selection side, this is a good pair to be looking for short positions in. And when you look at the technicals, we've got the 0.6417. So this is the area where you start to, once you start to trade above here, you have a 70% chance of pausing or reversing in the week. And at the same time, we have this major low and the bottom of this range right above it. So we'll drop down to the 4 hours now, but I wanted to show you this on the daily because of how nicely this is setting up. Not to mention, technically, we also have the momentum and a consolidation, which of course is a bear flag. So every chance we come down to the low, even if I'm only looking to capture a day or two next week in this. So dropping onto the 4 hour, what I would like to see is, I'd like to see this pulling back. And the other thing is as well, there is a pattern breakout here. You see this head and shoulders technically. Of course, portfolio selection is the most important, but then overlaying the technicals onto it, look at what else sits here. So we've got multiple areas essentially of resistance, and of course we become overbought on the week if we trade above the 0.6417. So we've got a market which has limited upside overall based on the portfolio selection process. It then will be trading into multiple areas of resistance and becoming overbought on the week above the 0.64. So I really like this. Any pullback in this market next week is an opportunity in this area to begin to look for near-term short opportunities. And of course, if we break out intra-week, you can also look for that as well. But I do like the range trade, the play above the 0.6417 next week the most. Look how tight this range is in the 4 hour chart, no less, in the New Zealand dollar. This is why if you're an intra-week trader, and I actually mentioned this in last week's video, if you're an intra-week trader, you should not be trading intra-week in markets which are either too strong or too weak currencies paired against each other, or if you have major news events, CPI, interest rate decisions, all of these will cause consolidations in markets in the lead up to those news events. That's why you see this. So coming into this week, I would ideally like to trade this from the upper and lower bound. In fact, in this case, the lower bound. So if we pull back and we test this low, and there's also, you can see here in the 4 hours, there is a prior high over here. So there's kind of a space, between, you could say, this low and this kind of area here. There's kind of an area here. It doesn't have to be an exact price point. That if we start to come down, we start to trade below prior lows and into prior highs, and we trade below the 0.6165. This would be an opportunity to look for a near-term buying opportunity in New Zealand dollar for a day or two next week. And of course, if we just start to break out intra-week, you can of course look at, before we come down test this, you can look at those intra-week breakouts next week. However, I'll be looking for these reversion trades, fading these moves as they appear next week. Next is pound dollar. This market has been moving sideways, just like pretty much all of the Forex markets. And coming into this week, I do like pound dollar to the upside. What I would like to see is, I'd like to see this market pull back, and you can see there is a prior range low. We're kind of in a range. Now, the one thing I will note about this pattern is you can see we do have a low, we have a high, we have a lower high, and we also potentially have a lower high here if we just pull back. So if we breach the 1.26280 and the 1.2626, what I would really like to see first, if we come down, take out these lows, is I would like to see this market kind of stalling out. And that would be an opportunity to step in and essentially fade the false breakout to the downside. The moment it breaks, because of this pattern, there is a risk that you get some momentum to the downside. So I wouldn't necessarily jump in straight away. I would let this take out the lows, and I'd be looking for this to kind of hold and look like it's going to fail. That would be an opportunity to step in for 1 or 2 days up next week. Alternatively, of course, if we kind of break down towards here, but we don't pull all the way back and we break out intra-week, you can look up to the 1.2868. The final dollar Forex pair we're going to look at is EuroDollar. We look at this every week, but you notice both of these are in the negative side of the hedge-scoring system. So this is a market that is likely to be choppy. I mean, it has already been choppy, but this is not specific to this asset. This was across Forex last week. But on balance, because the US dollar is scoring lower than the euro, I would only favor long positions in this market. I wouldn't be looking to trade this intra-week for reasons already discussed in this video and last week's video, but any pullback into this area, test below this low, and we start to breach the 1.0860, this would be an area I would start to consider near-term buying opportunities for a day or two in euro-dollar. However, there are better dollar pairs than this I would prefer to trade next week, namely US dollar, Swiss franc, New Zealand dollar, and also pound dollar. Moving on to the final two yen pairs, starting with New Zealand yen. This has been a choppy market, and I'm only looking to be long this market heading into next week. So any pullback in this market, I'm going to be looking for a breach of the 89.28. And especially if we breach this, maybe we come down, test this low. I mean, the deeper we breach this, the better, really. This would be a great area to begin to look for a near-term bounce for 1 or 2 days next week in New Zealand yen. And of course, if we start to pull back and then we break out with momentum, so when we're looking at these breakouts before we get to here, if you break with momentum like this, and you start to flag, usually you only get maybe one of these in a week, and that becomes the opportunity for a follow through into the prior high and the 91.71. So the final yen pair we're going to look at is pound yen. This does rank as number 4 out of the Forex pairs for bullish opportunities, so breakout trades to the upside or a test below the 182.23. We had a really strong rally. You can see this coming down. We're lacking momentum. Then we get this strong rally, and that rally gives us a signal on the 10th here to say that 70% chance of this market pausing or reversing. So this move up starts to run out of steam essentially as greed overtakes. And then of course they get rug pulled up here. So as this pulls back, now we're neutralizing, we're washing out this greed. This is setting up pound yen further advances this week. If we drop down to the 4-hour chart, you can see this is the big daily move up here. This is the strong momentum. We start to run out of steam in this area. Any pullback next week, I'm going to be looking for a break of this low down below the 182.23, and look at these prior highs. So this is a really nice place where we can start to look for bullish opportunities next week. So if we trade below here, I'm going to be looking at a short-term buying opportunity in pound yen. And of course, if we fail to get down to the lower bound, for those of you who like to trade intra-week, any breakout with momentum and a pullback, this would be the opportunity for a follow-through into the 187. Wrapping up the video with the final CAD pairs, you can see New Zealand CAD, it does rank 16 out of 38. So, ranging with no significant directional probability. I wouldn't intra-week trade this. I would only range trade this because they're two kind of neutral currencies. And when you get that, this is what you get, this kind of sideways move. So what I'll be looking for is only a trade from the lower bound in this asset if we can come down, test the daily lows here and breach the 0.8291. So any pullback in this market would be viewed as a potential range trade from the lows at the 0.8273, especially if we can breach the lower bound here at 0.8291. Why? Because we start to trade below here, 70% chance of pausing or reversing on the week, and we trade into a support area. So this is why I'd be looking for a near-term bounce next week in this market. You can also look for intra-week breakouts with these setups. However, because of what we just discussed and the choppiness of this, I would leave this for intra-week breakouts. In fact, these final CAD pairs are not the best markets. They are on my watch list for potential range trades. However, I much prefer the other markets we've looked at. Wrapping up the Forex pairs then with pound CAD, we have quite a nice setup here on the pullback. We have this reversal, here's a low, here's a push high, then we have a high low and we break out. And these previous broken highs, they sit right below the 1.6941 where we become oversold on the week. So any pullback in this market, I'm going to be looking at a potential trade into the 1.6941 and the previous highs. So the trade itself is not that. That is the opportunity to step in and look for a short-term buying opportunity in pound CAD between roughly the 1.694 and the 1.692 next week. This is the area I'll be looking for a potential reversal in this market. Finishing up with gold and silver, I am bullish on both of these assets because of the bearish bias in the dollar. You can see this is already has started to break out. So I'll be looking for one of two things. If we continue down and we pull back, you can look for a secondary breakout intra-week. We're on the 1-hour chart here, looking up to the 2082.86 and the prior high. Alternatively, if we start to pull back, and you see this sometimes, you get this initial breakout, but this is really just an A. The B is the fake breakout, and then you get a C. Well, if that happens and we start to trade into the prior lows and we trade below the 2020, so we become oversold on the week, this is the second area I'd be looking for a near-term buying opportunity next week in gold. Finishing up with silver, it's the same setup really as gold. We've started to break out of this, so I'll be looking for one of two things. Either intra-week, we get the secondary breakout as it flags, and I'll be looking up towards the prior high over here and the 24.05. Alternatively, if you're not intra-week trading and this starts to fail, it comes down, takes out the 22.59 and the prior low, this is the second place I'll be looking next week for a near-term buying opportunity in silver. I can either buy this market or do nothing. Selling silver next week is not an option for me. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.